Hi. So anyways, interest compounding and company compounding is what I'm going to talk about today. This is after Grayscale. This is talk about what I'm going to do after Grayscale. As I said, I'm going to sell about maybe 80%. Depends how high it goes. I'm going to leave the larger percent probably in Grayscale Holdings. This is about after the bull run, and this is more talk about the market in general. So interest compounding. You should know what interest compounding. If you don't, there's a lot of videos out there in the internet, on YouTube, about interest compounding. Look them up. I'm not going to go into the details, but if you don't know, okay, look it up. If you know what interest compounding, you already know that it's magical. It's magical if you over a long period of time. Just like the life insurance policy, the whole life insurance policy from a mutual company that I've talked about, they compound interest over time, and over time, it's a magic thing. It's a magic thing. It's phenomenal. I want to tell you something else that I found out. It's not just the interest compounding. For instance, if you hold AT&T, those old stocks, old gangsters, OGs. If you have those stocks over a long time, you're gonna be fine. You don't have to be trading. You don't have to be moving and jumping with money all over the place. There is something that I found out also, like interest compounding, money compounding, and that is company compounding. Okay, when you buy a stock the first year and you leave it there and you don't touch it, you're going to notice that it's doing something, especially something that's paying dividend or has some kind of a growth potential. Not all stocks are going to do good. So you have to be careful in what you pick. And I don't know. Let's say a company like something not too controversial. Okay, AT&T, for instance. Okay, that's something that my mom owned a long time ago, and it's still paying in dividends. It's still, Verizon is the other one. It pays its dividend. It's not a big deal. 5-6% or so, I think they're paying right now. But if you hold it 5-10 years, those stocks begin to, should I say, sizzle? Not just the compounding, but the company compounding. You're reinvesting that money into the same company, corporation, and it has it has a life of its own. It's sizzling, especially those blue chip type companies that have been around a long time, and they'll be around for a long time. They sizzle after a certain amount of years. After a year, even like Nvidia, that I just got in last year. It's up 130% in one of my accounts. 130%. Okay? And the other one that I've been kind of going in and out, jumping around, because I got to take money out to pay the taxes and pay people back, and I can't, it's an account that's I'm trying to invest at the same time, and then at the same time trying to pay my way through life. It's gotten that bad from the $1,080,000 that I had. it's gotten that bad that I'm kind of like jumping around a little bit. It makes you jump around. I could go get a job and, so I can pay the bills and leave the account alone, the account on its own. I don't know. I'll give it a few months, see how things go. But in those other accounts, that Nvidia, it's sizzling. It's sizzling. What's going to happen next year? It pays a little dividend. It keeps growing. The older the stock is, it's like an internal compounding on the stock, especially if you reinvest, which we have that now. Well, there used to be reinvestment before, but now it's like automatic. The company is compounding itself. It has a life of its own. And if you leave it alone, don't touch it. If you leave your account alone, don't touch anything in your account. Just leave it. Walk away. Because the second you start selling this and buying that, and I better get this stock and sell this one. What I'm doing is really good. I'm a hot shot. I go on YouTube and make videos and. When you start jumping around, that's the worst thing you can do. If you leave your stocks, the stock itself, the company itself, starts compounding on its own. It starts sizzling. It starts making something. It's 5 years down the road. The Nvidia that I have, without touching it, how good is that gonna be? It's another one of those long-term things that I'm just gonna leave there for now. But interest compounding. We'll keep talking about that as we go along. Market, we're going kind of sideways. That's what I thought was going to happen. We had a nice upturn a few days ago. Great. The rest of the week, I kind of think it might go sideways, but it might go down a little, up a little, and maybe we'll see next week another jump up. That's the other commandment. Thou shalt not disturb compounding. And there's two kinds of compounding. One is money compounding, interest compounding. Another one is company compounding. You don't want to touch, you don't want to be buying and selling. The second you start buying and selling, you start over again. Unless you need to do that, if a company is really, you really don't feel safe with the corporation, company anymore, and you want to start over again, okay, buy. But buy something long term that you don't have to be worrying about. Buy some Berkshire Hathaway. They got another stock for that. Hey, those stocks that Warren Buffett has bought over the years, they're sizzling. Long term, you're gonna have something when you're 50. Imagine holding one of those stocks. Look at what happened with that, with Warren and Charlie Munger. Over the years, they have grown it into billions. By not moving them around like jumping beans, but just let them go, let them sizzle. Once they start sizzling, they start giving you money, and leave them alone. Once you start selling them, then you have to pay taxes. Then you take losses, and that's why your account is in the red all the time, because you keep jumping around from stock to stock. You have to be paying taxes sooner or later. You got to pay taxes on those stocks, and leave them alone. Leave them alone if they're good stocks. If they're one of those stocks that we all get into because we see an ad or somebody talks about something, and we get into them. It's different. But with good quality blue chip type stocks, leave them alone. Okay? That's the commandment. That's another commandment. Thou shalt not disturb or disrupt compounding. That's what I've learned. Okay. Bye.